Traders, stop pooping your pants! Bitcoin is entering the most compelling part of its correction. Support is thinning, liquidity is stacking, and the next move will not be gentle. Today, I'm going to show you the exact levels that decide whether Bitcoin collapses into deeper support or snaps back into one of the sharpest reversals of the month. And the macro headlines? They're bigger than anything we've seen, and all I can say is, prepare for some more Michael Saylor impressions. Let's go! Let's start with the 4-hour chart. Bitcoin rejected perfectly from this red supply block. And once we compromised the mid-range, we started printing a staircase of lower highs and lower lows. That's classic persistent weakness. You can see that very clearly right here. And right below us sits the yellow support. This line right here. Now, that happens to be the 84K area, right? And that is the only major liquidity shelf before a deeper range expansion. If this level gives way, momentum accelerates. That would take us back into the 80K area or the high 70s, right? 78K to 80K is a pretty significant support level on the big picture. So a break of this, and we can see that increases the probability of that scenario developing very quickly. Now, zoom out with me here. This is the weekly zone. This giant green block is the real inflection point. It's where the market has historically absorbed traders who poop their pants. A weekly tail into this zone is fine. A weekly close inside it, that opens a door to the next leg lower. Check this out. This area is very, very significant. Now understand, the market needs to choose. The market needs to make this decision. This is not something we can know in advance. Unless, of course, you know Nancy Pelosi. Maybe she can help you out with that. But otherwise, this is something that the market must decide. And what we are waiting for in these situations is confirmation. Do we get any type of confirmed reversal in this area? That would be very bullish, because then we would get the bullish scenario likely. And I have to say a couple of things about this zone that are very significant. If you look back here, this was a previous resistance. I don't know if you recognize it, but this was also the previous all-time high before the election. Remember that? So that is one reason why this is an important inflection point where the market is likely to find support and reverse. It's a probability, okay, a high probability. The other thing is there are other reasons, like the lower 70K area is the break-even point for Bitcoin miners. You'll have to fact check me on that one, but I understand that that's one factor there, right? I just don't know if that's the precise area. The other thing is apparently Michael Saylor's break-even point is around there as well. So I don't know if that's true or not. Again, you'll have to fact check, but if those components are all true, that just makes for more of a compelling argument for the market to bounce in this area rather than break. But always remember, anything is possible. If it breaks, it's going to be ugly. This is the line between bull market correction and trend reversal. This is the level traders are watching right now. This is a key support level. Lose it, we slide into the high time frame demand. You can see that illustrated by this formation right here. But if we can hold it, if we can hold this, Bitcoin gets room to breathe and attempt to bounce back toward the 90K area. One of the reasons why this is such a key area is because there have been many attempts previously to sell through this thing. And every time you have one of those attempts, as you could see on the chart here that I'm pointing to, every time there's an attempt to sell, people get short. And you have a significant portion of the population of participants who are short. And the market went against them for quite some time. And you have to understand, these larger traders or investors or whoever, these participants, they don't use stops. So they get stuck in this thing. And when the market comes back to their price and they have the opportunity to get out, those shorts become buyers. And what happens is when the buyers who are waiting on the sidelines recognize that there is buying activity, they jump in as well. And that's typically what causes a short squeeze. Now, if those buyers don't jump in, those sideline buyers don't jump in, and then instead there is weakness, the weakness persists, that's when you can get a break because you have selling pressure instead. Because instead of buyers waiting on the sideline, you have aggressive bears jumping in because they can smell the weakness. Oh, I just had to do that. Okay, moving on. And the daily chart tells the emotional story. Sort of like a Spanish novella. Ay, papi. You gotta love those Spanish novellas. Anyway, this circle right here highlights one thing. We are testing the same level buyers protected previously. If Bitcoin can hold this green block and reclaim market structure, we get a mid-range bounce, like this illustrates right here. But if we fail, the market hunts liquidity lower. And you know what that means? It means it's time to talk about box. So on that note, here's your friendly reminder not to lose your head. And for you perverts out there, you know which head I'm talking about. This 3-day chart shows the fear box. Wait a minute, Frank, I think you sent it like this on purpose. You put head and fear box in the same section? I'm telling you, man, you're baiting me into this. Don't lose your head in the fear box. Anyway, okay, seriously, this 3-day chart shows the fear box, the zone where retail panic historically peaks and long-term players quietly accumulate. George, it's time to buy. If Bitcoin revisits this area, it doesn't mean the cycle is over. It means emotions are resetting before the next phase. So again, don't lose your head in the fear box. If you're going to lose it in the real box. Okay, enough about box. Let me show you something more interesting here. This yellow line right here, this is your point of control. The price level with the most volume recently. It's been compromised. And when price drops below the POC, not to be confused with AOC, it enters the low volume zone, an area where moves accelerate. The next major volume node, right inside this green support block that you can see right here. And you can see some price action right now reacting to it. That's your magnet. That's where price naturally moves unless buyers intervene aggressively. I just want to say something about market profile because this is actually a very, very helpful way to look at the markets. If you're not familiar with it, I just want to take a moment here to explain why it's worth learning. Market profile treats the market like a two-way auction, organizing trades into a unique visual shape, usually a bell curve like you can see here. This tells us exactly where the market's true value lies. The thick middle of that curve is the value area. This is the price range where the big money, the institutions, do the majority of their trades. This is the fair price. And any prices outside of this area are considered unfair or rejected, which signals where the market is likely to reverse or find a new trend. Why is this essential? Market profile gives you three things simple charts can't. One, context. You can instantly know if price is cheap, fair, or expensive. Two, it provides objective institutional levels for pinpointing entries and exits. And number three, confidence. You stop chasing price and start trades based on established value. Market profile is your trade roadmap. It converts complex market data into clear, actionable intelligence. So if you're a serious market practitioner, it is worth learning how this works. There's plenty of information of this on the internet. And if you're not a serious market practitioner, then just go buy some fart coin and leave me alone. By the way, if you enjoy this content and would like to support the channel, please check the links in the description, BTCC and WEX, and evaluate them to see if they're a good fit. Also, don't forget to like, subscribe, leave a comment, and send this video to someone, especially if you think it'll piss them off. No pressure! And now the headlines, because today wasn't quiet, it was historic. Tokenized assets hit $330 billion, new all-time high. Funds, stocks, derivatives, and everything in between is now on chain. This is not the future. This is now. Okay, pause on the cheesy announcer voice. So, articles like this, they're good for background information. Like, when you go to a cocktail party and you want to impress the women there, you're like, the market cap for tokenized assets just went above 330 billion, because I'm financial. And she'd be like, oh, I'm so impressed. Wow, he's so financial. I have no idea what he's talking about, but I certainly know how to spend $330 billion. Want some box? Uh-oh. There he is. Saylor bought $1.8 billion of Bitcoin in 14 days. Michael Saylor went full tilt. Full Saylor, buying $1.8 billion worth of Bitcoin in 2 weeks. His comment? The Bitcoin hoarding will continue until the complaining stops. No one is positioning harder for long-term upside than this guy. Look at him though. He doesn't look like he sounds like the way he sounds. Like when I first saw him, pictures of him on YouTube, I thought he would sound more like a guy who smokes way too many cigarettes. I'm Michael Saylor. Buy Bitcoin. Then I see him at a keynote, I hear him speaking, and he's like, hi, I'm Michael Saylor. Buy as much Bitcoin as you can because by tomorrow it's going to be 10 trillion million billion dollars. I'm like, another one of these guys. I'm going all in. Why do you think I can't pay my rent? All right, enough Michael Saylor impressions for today. Institutions are becoming more comfortable deploying on-chain. We're seeing new Bitcoin-backed apps built for stability, transparency, and institutional risk models. This is infrastructure, and institutions don't build unless they're staying. What's interesting about this is 10 years ago, they wouldn't even touch this stuff. They're like, Bitcoin, that's like a scam or something. So it just goes to show, the herd mentality applies to them just as much as it applies to retail. It's just that they have deeper pockets and they can afford to make bigger mistakes. But this type of activity is certainly a plus for the future of this space. $6 billion in leverage to be liquidated. Over $6 billion, Mr. Powers, in leveraged trades sit on the books right now. It doesn't matter if Bitcoin goes higher or lower. Someone's getting liquidated hard. Look at this graph. This is a very interesting graph, actually. If you look at where the bulges are in this graph, you can actually see the support and resistance levels that we've been talking about on these Bitcoin charts. Look at the 95K area. This was when Bitcoin was fooling around the 88K area. Look at that. What's interesting about this chart, again, these are the liquidation levels. These are basically where the liquidation stops are. It's a 30-day graph. I would love to see what a 60-day looks like, because we would probably see what's sitting up at 100K or at 78K, which is missing on this graph here. But it's very interesting how this coincides with the levels that we've been observing on this channel. Who cares about these levels? I just want to buy some fart coin. NASDAQ confirms Strategy's MSTR stays in the NASDAQ 100. Michael, what do you have to say? No removal. No index reshuffle. MSTR stays in the NASDAQ 100, making Bitcoin exposure a baked-in part of one of the world's top equity indexes. Because I said to them, imagine us sitting at a table and you saying, yes, MSTR can stay in the index. Because I said, if you kick it out of the index, you will miss out on trillions of dollars because I'm going to make trillions. Okay, Michael, enough. So here's the full picture. Bitcoin is losing local structure. It looks like caca and it stinks. Testing major support and drifting toward high time frame demand. The fear box sits right below us, and you know how much I love box. The weekly trend hasn't broken, but it's close. Meanwhile, Macro is on fire. Tokenization is at $330 billion. Saylor is buying billions. Institutions developing on-chain. And the NASDAQ keeping Bitcoin exposure in a major index. This is adverse movement with a purpose. Stay cool, stay patient, and I'll see you in the next one.